All right, guys. Good day, and I hope you're all having a great night rest if you're sleeping. Today we're focusing more on key support and resistance level. That is expert level support and resistance. So I'm gonna draw up a tab for you guys to see. And currently, I'm not really using Trading View. I'm using Bybit's charts overview, so you can see the chart now, and this is their um chart data. So this is what we'll be doing. I'm going to pull up a yeah, this is it. So I'm going to pull this up so you guys can um see this. All right. So like I said, we'll be discussing on high quality support and resistance. So in order not to bore you with my talks, so I decide to write out the criteria you should look out for, or you should watch out for whenever you want to pick out your um, support and your resistance. You know, the issue is not just getting the support and resistance. The issue is making sure they are high quality. All right, all right. So the essence is for you to make sure they are of high quality. That is what we are all about. That's all we are after. The quality of what we are doing. Okay. All right. So now these are the criteria. Number one, the swing guy and the swing low. So we'll take these criteria one after the other. But let me start from number six, which is start with higher time frame, mostly weekly. So let's do that. I'm going to move this from the screen now, and I'm going to expand this. Now, I think I once explained what swing trade is all about. As a swing trader, it means that you want to trade for a period of time, probably a month, months, week, weeks, whatever you desire. So now let's go to something low. So we're also going to follow the top-down approach. So let me start with a weekly time frame, and we're going to follow our this thing strictly. Like I said start with higher time frame, and using the higher time frame, this is the weekly 1 week time frame. Probably in other way, in other words, you can see some charts they write 7 days instead of 1 week. So we are still saying the same thing. So now the first thing we have here is that first you should recognize the swing high and the swing low. So let us do that now. So the question is, what is a swing high level? A swing high level is the highest point that price reached before it begins to tank down. And taking a look at this, you can see that this is your swing high. This is the highest point the price gets to. This is another swing high. You can see that the price respect the same level here. You can see, and the moment the price gets to the level, you can see that it begins to goes down. All right, so let's do something first. Now that we've recognized our swing high, then let us recognize our swing low. Here is our swing low, the lowest point that price got to before it begins to move drastically to the upside. This is our swing low. All right, so just dropping this cycle doesn't really make any sense, because if you go lower, it doesn't really make any sense. So this is what we're gonna do. Let's delete this circle. So I'm trying to reduce the way I speak. I don't want to speak very fast so you guys can understand what I'm saying perfectly. All right. So remember, we are dealing with high quality support and resistance, and one of the qualities that you recognize the swing high and the swing low, which is on the norms, you do something like this: pick on horizontal line, and you place it on on the highest point. So we have it here. We have it here for the weekly time frame. And for the swing low, you drop it around this level. This is your swing low. All right. So after recognizing these two, what's the next thing on our? So it said multiple rejections. So it means that high quality trade, high quality support and resistance must come with multiple rejections. So what I did here is just a line. So in order to make it more presentable, let us turn it into a zone. And how do you turn this your resistant level into a zone? Then first you delete this. Then what do you do? What do we do next? We actually change it from, so we change it to rectangle. Then what do? You draw this rectangle, it becomes a zone. All right. So we said multiple rejections. The first candlestick here, the green candlestick here, it's an is a rejection. The second one, the red one, it's a rejection. We come to this level, this is a rejection for the green, and this is another rejection for the red. So what does that mean? It means that this point is a point of interest to both buyers and sellers in the market. This is a very key point of interest. Now, when the price gets to this level, you see that it reverses drastically. And it gets to this level, it reverses drastically. So you keep that point. Next, remember, these are still our criteria. We are still trying to bring out our criteria. Multiple rejections. The move away was drastic. It means that when it moved away from that level, it moved drastically. Take a look at this level. On reaching this level, you see that the price tanks down onto this level, keep on moving till it gets to this level. That is, there is a very big move away from this level down to the bottom. And something like that is actually happening here. We are experiencing another move away from this level down to this level, or probably to this level, or probably to this level. We cannot decide. All right. You won't be the one to decide. So, what we are doing right now is to just draw out our support and resistance level. I'm not doing any other thing on this video. All right. So, let's come to this level. What do we need to do? We have to use the rectangular distance to recognize our swing low level. This is our swing low level on the weekly time frame. So I'm gonna do something. I'll change the color of this my box. So red means danger. So we're gonna use red for the weekly time frame. We're gonna change it to red. So now let's target. Let's target. Let us target. Okay. Weekly resistance. All right. Now let us tag this as well. Weekly support. So after writing weekly support, let's do something. No, I said something. One is swing high and swing low. So just write SL, which signifies swing low. All right. So you just put it on the chart. This, let's do something with this. Let's do something. Okay. So we also include swing high. All right. So we have it there. So, what other levels can we recognize here? What other support and resistance level can we recognize in between these swing high and swing low level? So you can obviously see this level here. So let us draw it out. This level is obvious, and following the rules I gave you. So let's follow the rule. Number one, we know that we are working on the swing high and the swing low. We've recognized the swing high and the swing low, and in between, we must recognize other levels of support and resistance. Then multiple rejections. Let's go to number two all over again. Multiple rejections. All right. So we have a rejection here. One, two, three, four, five, six, seven, and eight. These are the multiple rejections that we get here. So once you see this level, so the moment you see this multiple rejection, what's the next thing you understand that this is another what? Resistance level. So now it serves as both resistance and support level. How? You see this candlestick getting to this level and going back up means that it serves as our support level. It supports the price at this level. All right. So apart from that, there are some other obvious levels. There are some other obvious level within these levels. So here we have another level here. This is under key level. So we have another key level with multiple touches. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So around this level, we see support turning into resistance. Resistance turning into support. So you draw on that level. We still have other levels here with multiple touches. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. More. Let me draw this one to this level. All right. Consider it. All right. So we have something like this. So we still have other levels here. We still have other levels. So we still have other levels. These are under level. But in order to avoid analysis paralysis, what do? There are other rules we've got to follow. These are other rules to follow. Now, I said the level was recently respected. This is it. The level was recently respected. Now, what are the levels that were recently respected? We see this level here. Take a look at this level. So, if I want to do something, I will actually, because I know that for no reason will the price of Solana comes down probably to this level anymore. During this bull run, I know the price of Solana won't come down to $160 and probably won't come down to $130. Not so this is not a recently respected level. So what are the recently respected levels? I'm gonna remove all this from the okay, let me leave this, then I'm gonna remove all this. Let's remove these. Do I remove this? No, this one is a very obvious level, so I'm gonna drop it. I'm gonna remove this and allow the swing low to take effect here. So I'll allow the swing low to take effect and allow the swing high to take effect. So first, this is a recently respected level. And immediately it entered into this level, you see that the price begins to tank down. And if you have to follow this thing, the price of Solana can eventually drop to 205 following this on the weekly time frame. So the price here is a recently respected level. The price here a recently respected level. So and the most recently respected level is $203. So meaning that this price can come down and get into this level. Are you guys? I'm very sure you guys understand what I'm saying. All right, so let's expand. What are other rules? Acted as both support and resistance. So let's take a look at this. This level acted as both support and resistance. Look at this, it supports this candle and it becomes resistant to this candle. All right, let me draw something else so you guys can understand what I'm saying. So this it supports, it becomes resistant to these candlesticks over here with four rejections. Remember, multiple rejections. And over here, it becomes support just with one rejection, with one candlestick before it moves drastically to the upside. And now what's happening, the price is actually coming down back to this level. All right, so we can obviously see our weekly support. So it is, you can predict what will happen here. This is predictable. Whatever you want to do here is predictable. You can predict that, oh, whenever the price gets to this level. So let's assume you've seen this coming. Yeah. Take a look at this. It tries to break this level up to 264, but it could not break the level. And this same thing happened what year? That is 2021, November of 2021. It touched the level, and this has been the highest level this price got to, although it tries to break above the level here. So touch the level, and the moment it touched the level from 200 and something plus, it tanked down to around $8, losing around 99% of its price. Wow, that's not funny. All right. So, and from that $8, it rose back to $264. All right. So, this is what we're doing. So, on our weekly time frame, you can see that our support and resistance level are very obvious. Now, let's go back. Remember, we're following the top down level. So, let's go to our daily time frame and see what is happening over there. All right. All right. So if you check the daily time frame, you can see that there is a level here. You can see that the price comes to this level, it rejects it, move up. Comes down to the same level, it rejects it and move up. So what do? You draw this level because number one, taking a look at our criterias. First, it has multiple rejections. This is it, multiple rejections. So let us draw it and give it another color. All right. So let's do this one. Let's give it another color. Let's give it a yellow color. So to recognize that this is a daily time frame. So take a look at this. So whenever the price drops down to what's the level? 221. We expect the price to go back up right now. All right. So this is it. The moment you draw this level, you recognize that this is your daily level, daily time frame, or your daily time frame. All right. So now the price is coming, touch this level, goes back, multiple reactions. You can see the multiple reactions here, touching this level. First, when it was coming up, it touched the level, touch it, moves down drastically on different occasions 1, 2, 3, 4, 5, 6 on 6 different occasions. And take a look at it. The price touched the level one, rejected it, touched it the second time, rejected, and this is the third time. So we're expecting a rejection at this level. And if it refuses to reject it, then we are going down to the next support area, which is 201 or probably 201. Or this is another level, but it's not a very significant level. But it might come down to this level. Whatever makes it come down to this level, that we're coming to 201, which I believe might not happen. Yeah, except Bitcoin messed up. So if BTC messed up, then we're coming down straight to $200 level. So this is how you predict the market. This is how you predict the market. All right. So what other criteria do we have to take a look at? We have to say that the level was recently respected, which is touch this level here, touch the level here last week. This is the new week. Yesterday. Yeah, yesterday. This is today's candlestick. All right. So acted as both support and resistance. Let's take a look at this. Around this level, it becomes the resistance level, and now it becomes the support level. It means that it fits directly into our criteria. All right, guys. So this is how You choose what to trade, when to trade, and how to trade. This is the top down approach because that is a reloaded top down. So let's go for our 4 hours time frame and see if we have another level that we can look into. Take a look at it now. It fit in perfectly. The price coming down, trying to touch this level, and touching this level, we expect it to move to the upside. So this is what I'm gonna do now. Whenever I want to trade, I will allow this price to get to this level, and I will look for a trend change candlestick. Might be a rejection candle like this, hammer candle, anything at all. And probably this might be the rejection I want. Just like I say, this candle. So try to move up. All right. So let me do something. Let me see if I can possibly draw a trend line around the 1 week time frame. So I could not draw a trend line because the price movement is drastic, so I cannot draw a trend line. So let's come to 4 hours time frame and see if peradventure we can draw a trend line. All right. All right. So we have our trend line here. And currently you can see that the moment it breaks below this trend line, it begins to touch it and reject, touch, reject, touch, reject until it gets to this level. So if you are interested, you can monitor this trade and place your entry at around this level. I won't do that on 4 hours time frame, so I will prefer to go for a lower intraday time frame, like the 1 hour time frame, to place this trade. That is eventually if I'll be placing the trade. All right, see, look at it. It touched the level. Let me, yeah. So this is the 1 hour time frame, touching the level, comes, touch the level, push it up, touch it, push it up. So this might be the third touch. And the moment you touch it the third time, what am I going to do? I'm going to go for um, a swing trade. All right, so let me go back to the 4 hours time frame and see where are we going after this rejection. Then we have another level of rejection here that we should take into consideration. So we have it here. So you should take this into consideration that after leaving this level, the price can get to this level and still come down to around this level. So we sell on that level here, sell on that level here, that the price can still get to. Why? Because we have multiple rejection around this level. Take a look at this multiple rejection. So what do we do? The price can still touch this level and come down. But I don't think this level is it's significant enough. So immediately touch the level, getting this bit that we have to push it to the upside. And what do we do? Then I'll place a swing trade from this level, and this will be my um TP. All right, so let's do something. I'm not making it a favor. Okay, not this. All right, long position. So I place my entry at this level. Stop loss below my stop loss below my recently respected this thing. Then remember I call it a swing trade. Then I push my TP to around this level. So I go far. So we have 33%. So this is 33% on, sorry, 15% on one hex. If you are using feature straight, 15% on one hex, and 15% on one hex, and we're going to have 150% on 10 hex, 300% on, so on 20 hex. So this is it. This is how you do your top down approach, and it's very simple. I hope you guys enjoyed this class, and make sure you kind of give me some accolade in the comment section. All right, guys.